But what we see is this aspirational people, that middle class growing, wanting to be that billionaire overnight.
Now it is difficult to have a jewelry worth 22 carat. Now 22 carat gold jewelry, if somebody is buying, assume that that person is actually rich or very rich.
So what will be your advice to people who are entering that, but how do they differentiate between being aspirational and greedy, and how do they draw that line?
So there's a difference between having aspiration and being greedy. Where people fall into trap is when they become greedy.
The Nifty indices are going up, but if you look at individual stocks, and that performance is not so great. So there is that sort of a deviation in these two figures. So how do you put this in perspective? India is a growing economy, and many people are moving into trading. They're putting their money in stock market. And recently we got the projection of the GDP with 8.2%. Everything looks so positive and rosy. But is it all that rosy? Let's have a conversation with the expert. Here we have Mr. C.A. Manish Kumar, who is a well-known face in the traders community, who's an expert in options trading, and he runs a YouTube channel, Learn with Manish Kumar. Welcome, Manish ji. Today we'll be discussing the reality of the rosy picture that we've been talking about, how great the economy is, and what is in there for investors and traders. So, to begin with, right, you have been in this industry for quite some time.
Yes.
So, how is today different from how it was maybe, let's say, 10, 15 years ago?
So one liner difference, if you want to listen, is that earlier people used to know that what is happening in reality. Today, the actual picture is not being shown to the majority of the people. And the major difference is, earlier we used to know that, okay, there is a problem. Now we feel that everything is at the right place at the right time. But that is not the case for entire India. You may say that everything is happening, but that everything is being driven by only 1% of the population. Rest 99% of the population is struggling to meet their means also. And to put it in perspective, 1% of India is 1.4 crore, 1.5 crore. So every inventory of real estate you see, or every shop you see, or all the coffee shops or all the cafes you see flooded with people, it belongs to that 1.42 crore people only, which has money. And they are earning at par with, say, for example, somebody sitting in Europe or US or UK. Whereas rest 99%, 9% are somewhat people who are just managing their stuff. Rest remaining 90% are the people who are living in a standard which may probably be lesser than the African countries also. Right. So that is the actual segregation in India, where you have 1%, 9%, and 90%.
Right.
And this 1% can afford anything. All the foreign travels you see, all the everyday travel of airlines you see, all the overbooking of airlines you see, it is driven by that top 1% only. Other 9%, they are somehow managing the thing. All the growth in the economy is seen in that one particular percentage only. The remaining 9% is managing it, and the disparity between that top 1% and the remaining 90% is it keeps on growing.
Right.
And the kind of disparity we have in India, it's huge. There is no end to meet at somewhere, and probably it will not meet.
Right.
So when we talk about societies, ours has now become a society where there is huge disparity. Whereas to compete with something like in Europe or US or UK, you need to have an egalitarian society where you have people from even the bottom of the strata can end up being the top CEO of a company.
Right.
But that cannot be a case in India. You will have one or two exceptions to it, but that cannot be a case. I will give you an example. Most of the viewers, they will be hearing about this company called Starbucks. But if you read about the current CEO of Starbucks, he is a billionaire. But if you read his entire story, he came from a very humble background where his housing was also subsidized. Like we have our housing subsidies from the government, right? So his housing was also subsidized by the government. Means he comes from a very poor background, and he ended up becoming a billionaire. In India, that particular ladder is almost impossible to attain for majority of the population. You will have one or two exceptions everywhere, but that one or two exceptions is what we have, not more than that. And because of all these differences and disparities, our economy may be very booming and all those things, but the bottom of the picture, which is 90% of the people, they are living at the bottom of the barrel.
Right.
And that is where we have to work most about. And probably everyone has given up hopes on them also, because nobody is working for them. This is what I interpret from all the numbers. Additionally, major component of our economic growth is driven by government revenue. Means government puts money into roads, highways, and everything. Whether they are surviving or not is a separate question altogether. But that money coming into the growth is actually a reflection of the 8.2% of GDP, which we see as a number.
Perfect. I asked this question because a lot of people, who are aspiring to become a trader, who want to invest, they think it works independently. But the reality is that it works as a part of the economy, which is why understanding the economy becomes very crucial for anyone. You be an investor or a trader, anyone, right? It kind of becomes important. And like you clearly mentioned, that inequality, that disparity is growing, but there is also a growth of middle class economy, right? That aspirational economy. And those are the people who are actually coming and who really want to see how, they do look at making quick and fast cash money, but we are seeing news every day about these people getting scammed. The outcome of getting scammed is simple, that they expected to make more money and they pretty much got scammed. But what we see is this aspirational people, that middle class growing, wanting to be that billionaire overnight. So how do you see this change?
So there's a difference between having aspiration and being greedy. Where people fall into trap is when they become greedy.
Right.
Having aspiration is a good thing, because say for example, if you have this aspiration that say today I am earning, let's keep an example of an average middle class people of say I am earning 5 lakhs per annum today. Now my aspiration is by next year I should be earning 7.5 lakh per annum. This is aspiration. But if I am earning 5 lakhs per annum today and I aspire that from next month onward I have to earn 5 lakh per month, this is greed.
Right.
When you are in greed, people are ready to simulate your greed, extract money from you, and then you will get scammed.
Right.
And that is how this entire system is working, and that's why you will find people getting scammed more these days. Despite having all the knowledge, despite having all the awareness, people are getting scammed.
Right. So within this, options trading or getting into trading, the reason I'm bringing that is because it's been growing ever since COVID hit, especially the stock market, where people started putting in money. And a lot of people actually enter without the fundamentals of it. And that also I see is a reason where there's a knowledge gap on understanding how it works. And that is also a place where, like you mentioned, people are becoming greedy part. So what will be your advice to people who are entering that, but how do they differentiate between being aspirational and greedy, and how do they draw that line?
So people entering stock market is a good thing for the stock market itself, and it's good for them also, because at the end, to beat inflation, you have to have a place where you can earn more.
Right.
The challenge, what we see or what I see, is that people are entering the market without having proper learning. Now, you enter any field, say for example, you take up a job with an IT company. For that, you need to have a bare minimum qualification, right? Similarly, for stock market, since there is no qualification to enter, anyone can enter it. But the challenge is that whether you are able to sustain in the market or not is a bigger question. Now, people with surplus money come into the market. Who has surplus money right now? People with good amount of knowledge and experience. Now, when you are entering, you are competing with people who have good amount of knowledge and experience.
Right.
So your bare minimum threshold is not the other person traveling on the road. The bare minimum threshold is somebody who has already been doing very well in their field, and you are competing with them. And when you are competing with them, You have to be on your toes all the time. If you are at your toes, probably your results may be better than others. But if you take it so lightly, then the stock market to hai, you one ends up making money easily. Trust me, stock market is a graveyard for people with money. 90% of the people coming into the market end up losing money because they come with an attitude that money solves all the problem. It doesn't, because the kind of money you have, others also have the similar amount of, or maybe more. So money is not the differentiator over here in stock market. If you have say 5 crore rupees, you will have somebody with 50 crore rupees. If somebody has 50 crore rupees, you will have institution with 5,000 crore rupees. So where do you fight with them with amount of money? You cannot fight with them for money. You can only compete with them for your knowledge, with your knowledge. And that is where people miss it. People forget that earning is a byproduct of learning. But that's what people miss everywhere.
Right. Perfect. So when it comes to, since we are talking about stock market, currently, what is your outlook? Because what I am seeing is the Nifty indices are going up. But if you look at individual stocks, and that performance is not so great. So there is that sort of a deviation in these two figures. So how do you put this in perspective?
So I always keep telling people that Nifty is like an Indian cricket team, where if you have a bad performance, you go out of the team, and whoever is possibly to perform better will come into the team. So similarly, Nifty 50 has 50 stocks, of which if somebody is performing bad, he will go out of those 50 stocks, and the others who are doing well will come into the count. And that is how this entire system works. And why Nifty 50 keeps on doing well is because people have realized that putting money into mutual funds, specific mutual fund, will have higher amount of say expense ratio. Whereas if you put money into, say for example, a index fund, it will have a very less amount of expense ratio. So people with money, they have realized that eventually returns in say a large cap fund or a mid cap fund is similar to what Nifty 50 gives. So, and why do I pay more expense ratio over there when I can have the same in a 1/10 of the expense ratio over here? So people are putting money into index funds, and that's why index, it keeps on propelling,
Right.
and it keep going up. And when you have the same amount of money being flocked into only 50 stocks, those 50 stocks will always have a particular level maintained. Whereas all the other stocks which are not performing, mostly people will pull money out of it. So you have one instance where you have buying pressure because of mutual funds putting money into it. You have other instances where people are pulling out money out of it. So that angle, that bit of stocks are having selling pressure, other is having buying pressure, and because of it, the disparity keeps on increasing.
Right. So, and what is your outlook as we are moving to 2026? What will be your outlook on this market?
So my outlook is like we will be able to maintain the similar levels we have right now, unless there is economic growth visually seen. See, RBI has taken good steps in cutting down interest rate. They have cut it down to 1.25% because they realize that there is a slowdown in the economy. Your real estates are not moving. Your cars are not moving. So all these high capital intensive products, they are not moving. Since they are not moving, you are at a place where it is very difficult to sell capital intensive goods, and that is where the most margin comes in. Right. So if that is not happening, there is a challenge, and that's why RBI kept on decreasing the interest rate, and at the level which they are 5.25%. Now there's the room to cut interest rate is very low, but still, even if the interest rates are so much low, it is bound to give an economic impact in a positive way. And if that keeps on happening, you may see a decent returns in markets very soon. Challenge will be the earnings. Now, it works in a lag. So if RBI has cut interest rate today, the impact will be seen after 3 months. So let's see how quarter 4 of this FY26 and how quarter 1 of 2027, which will be April to June of 2026, how results are coming out then, and then only we will be able to judge whether the markets are in a sync or not.
Okay, so we have to wait and watch for that.
Yes.
But nevertheless, since we looked at a little bit on the macro level, looking at the retail, like an individual level, right? So, as an investor or a trader, what are a couple of things, especially a lot of, I also meet a lot of students and people who want to get into trading. Everyone wants to get into trading because they see the news. So, what will be your three advice or more if you have, but couple of tips that you would say, you know what, listen to this and then get into it.
So for investing, I'll come to trading a bit later. For investing, don't go for stocks directly if you're not experienced. Go for mutual funds.
Mm.
It is much more easier to sustain. Go for index fund. It is cost effective also. Plus, at least you will have lesser volatility in terms of price fluctuation. If you come to trading, it is a very difficult thing to be in. If you want to actually trade, first focus on learning. Everything is available on YouTube for free. Focus on learning from YouTube. But learning, whatever you learn, even if you learn everything from YouTube, whatever is available on YouTube, that will only be 10% of the entire trading.
Right.
90% of trading is experience. That comes with practice. So when you are entering into trading, you will have to have this patience that it will take 3 to 4 years for me to at least understand what trading is. And when you put in 3 to 4 years, then only you will be able to figure out, okay, this is how trading works. And to survive for that 3 to 4 years, you cannot have an infinite amount of capital.
Right.
So when you are starting, you have to start with the smallest possible quantity, and that too with a proper discipline of stop loss and target. And so that every day, and the stop loss should be that amount which hardly matters to you in your real life. Then only you will be able to start learning the actual trading bit of it. And then with experience, as it keeps on growing, you can increase your lot size, you can increase your trading capital, and do that. But yes, it will require a lot of patience. It is not something which is a magic wand you just had run and then you have become successful in trading. It doesn't work that in trading. You will have to have a struggle period of 4 years where you will keep on learning every day with a small amount of profit or losses. And then at the end of say 3 year 4 year cycle, then you will be able to probably become a bit better version trader of what you were 3 years back. And once you become a better version, probably then you may start a profitable journey, not before.
Great, because I asked this because mostly we hear this that, and this is the data that keeps coming up, right? 90% of the traders lose their money. So if I have to start, I mean, I'm sure, our capital is at risk most of the time. But what is that minimum? Is there any thumb rule to keep this? This is the minimum amount you should start with. Or is there any rule for a trader who can start with?
So we cannot put it in a minimum amount thing, but the lowest lot size will be one lot, right? If you want to trade into options or futures, the lowest lot size can be one lot. If you are selling options, that one lot may require 2.5 lakh rupees also. If you are trading futures, the one lot it require 2.5 lakh also. When you are learning, most of the people start with option buying, so that one lot probably will cost you around 10,000-11,000 rupees.
Yeah.
That is the point where you start with, but you cannot risk that 10,000 every day. Say you take a risk of 5-10 points, not more than that. So that amount comes to roughly 500-700 rupees with a risk, and that similar amount of reward you can target. That okay, I will target 1,000 rupees, my risk is 750 rupees, and this way you can plan your trade. But again, having said that, for somebody that 750 rupees also matters, right? So for them, it is very difficult to enter into options trading at first. They can try with say stocks of 5 quantity, 10 quantity if they want to learn trade. So they can have 5 quantity or 10 quantity of a particular small stock, and they can learn with a risk of say 10 rupees, 15 rupees a day, just to get the feel of it, how it is working. Because you have to understand that experience will come with time, and that time is actually money over here.
Yeah.
Because every day you will come, you will hit the system, you will either make profit or loss. right? Most of the cases in the beginning stage, it will be losses only. If that losses is a huge amount of number, say you end up losing every day 10,000 rupees. 20 days a month, it becomes 2 lakh rupees. That's why you have this number of people losing 1 lakh crores in 1 year time period. Why? Because people have put in whatever money they had and they ended up losing. Right? So that is not how the journey should be. It should be a very small amount, and the amount should not be as much which impacts your real life. So that should be the way we should look at the amount. For somebody, that 2 lakh also doesn't matter. But that is not the case with everyone, right? For somebody, 2,000 rupees a month will also matter, right? So we have to think it that way, that what is the amount of risk we have to take. Because when you are entering trading, regardless of anything, experience, knowledge, or whatever you have learned from YouTube or any courses or anything, in the beginning, you will end up losing money. That is how the journey is. I'm not saying it that people should not come to trading. I'm just saying that this is the journey, because whenever you see you are into economics, right? I am into say any particular study, or he's into engineering. So for that also, when we were studying, we have already paid money, right? The similar amount of money is being paid to the market to learn the market. That is how it is working. And when you are paying money to the market to learn the market, if you are a good student, you will end up doing well in your career. That is how the trading works.
Right. Perfect. That's nice. Actually, beginner level, you're telling the failures are going to be there. It's inevitable, and how you deal with it matters. Now, what about people who started their journey, but I see a lot of people after they make a couple of losses, right? They don't come back into trading. So, what would you tell them? Would you suggest them to stay away, or would you want them to come back?
So that is completely their choice. But if they want to come back, if they come back with the same attitude that let's try the market, results will not be different. It will again be the same thing. Coming back or not is their individual choice, individual decision. I will not comment on that. Let's leave it to them.
Yeah.
But if they want to come back, they cannot come back with the same attitude that okay, let's try the market. No, it will again, you will end up losing. And that is the biggest challenge we have, that people try for 3 months, they again come back for 3 months, they again come back for 3 months. It shouldn't be that case. You be in the market for every day. You trade with just one unit of one stock. You probably make 5 rupees or lose 5 rupees. It will hardly matter in your life.
Correct.
But you have to stick around with the market. To check the market every day, get the feel of the market, to trade every day. And that's how you end up learning something.
Correct.
You end up surviving the entire journey. And once you have the confidence, you can start trading.
Right.
And in that while of 3 to 4 years, you need to have a control on your greed also. Which is the most important part, because you never know when the aspiration becomes greed. And that is the biggest challenge.
Right. I think a good analogy would be if someone wants to get a habit, a discipline. So once you do it every day, that's when it becomes a discipline.
It becomes a habit, yes.
Right. So that's great. And at the same time, a lot of people focus on the profit part. Like since we talk about the greed part. So when they make profit, they feel overconfident. But they fail to understand that it's not about making profit, it's about controlling the loss. So how does one manage their risk control? How important is risk management when it comes to trading?
So the bigger challenge is what I understand is that social media has spoiled everything. Now on social media, an amount of 10,000 rupees in trading seems to be very less. So say for example, you have traded and you have earned 1,000 rupees in a day. For social media, that amount is nothing. As per social media, you are an underperformer, because you could have earned 1 lakh rupees. Why you have settled only for 1,000 rupees? That is where the challenge is, because you are getting stimulated that this amount is very less. You should focus on bigger amount.
Peer pressure.
Yeah, peer pressure. So, but that is not the case. Somebody is trading with 1 crore rupees capital. For him, 1 lakh rupees also is 1% of his capital.
Correct.
But for you, if you are trading with 10,000 rupees, you have ended up making 1,000 rupees. That is 10%. You have performed better than him. But for social media, you are a failure and that person is a successful person. And because of all this happening, people in peer pressure are losing more money because it is simulating their greed. They have earned 1000 rupees in a day, which is a good amount of money, but they will again trade on the same day to make it 2000 rupees.
Mm.
Even if they make 2000 rupees, they will say, today is my day, I'll trade again more, and they will make it eventually cheap. That is how it is.
So how do they manage the risk apart from setting the discipline and not having the greed? How does risk
It
management
comes with
work?
experience. You have to understand that the basic solution what I try to give people is, you look around the people who are with you in your circle. Whoever is earning the best, compare with him. Say the person is earning 50,000 rupees a month in salary. You divide it by 20 days. So that comes to 2,500 a day. Somebody in your circle who is performing the best is earning 50,000 rupees a month. Means every day you have to just focus on earning 2,500 rupees to beat the best in your circle. That should be the goal. But problem is that the moment you make 2,500 rupees, you will feel that, okay, I should now focus on earning 5,000. In that case, while earning 5,000 rupees, you will end up taking more risk. And the more risk you take, the more probability of losses it becomes, and it keeps on increasing, and it keeps going up, and that's how the challenge.
Yes, like I think you rightly pointed out, social media and the whole peer pressure does not just in trading, but I think in general in life only it's showing a different perspective, and people should really focus on keeping that demarcation.
Social media has spoiled everything.
Unfortunately, it has. Although it has given us a lot of perks, it has also spoiled us in many ways. Very true. Okay, now shifting our focus a bit on the economy or how the industry is performing. Which sector or which industry do you think is a top performer in terms with a lot of logic, of course? And which segment I think we should be focusing more on the coming year?
So one particular sector which has been doing well and will continue to do well is finance, or banking and NBFCs. For the simple reason is that India is a place where we don't have capital. People don't have money, and the access of money is only through loans and advances and all the other means, right? So because of which, what is happening is that since people now in India, people have assets, people have land, people have properties, people have gold, silver, jewelry, everything, but they don't have access to capital. Now that access to capital is being provided through banks, NBFCs and others, right? That particular field will keep growing because we need capital for everything we do, right? And because of which, this particular sector, despite people saying that it has already run its life, it has done well, but you have to understand that if this 1% population which we talked about in the beginning is about to become 1.5%, 2% of the entire total population, this people from 9% will only migrate from year to year based on the capital. And that capital will come from banks and BFCs and others. Even the lower end of the spectrum, they are surviving only because of the credits or the capital amount or the resources being provided by the government in forms of rebates or in forms of others. So everyone who is into this field needs capital, needs money, and that money is from with the banks. And that is one sector which I feel is a safer bet compared to all the other industries. Okay. The other sector which I personally feel in India will keep growing is your food and beverages. We don't have much listed players for it, but if you see the consumption pattern in India, people are going for premiumization. Means at least the top 1-2% population are going for premiumization of things. So earlier you used to have a chai tapri everywhere in India with 5 rupees or 10 rupees of chai. You come to a city like Bangalore, you will hardly find a tapri. You will still find it in Bombay, in Kolkata, in places, but you will also find good tea cafes over there, right? So the same thing which was being sold for 5 rupees is now being sold for 50 rupees or 100 rupees. Right? So premiumization of the same product is happening everywhere in India, and it will keep on growing because you have so many segregations. Like you have a percentage of population who just to have the touch and feel of it of sitting in a cafe, they're ready to pay 500 rupees for Starbucks, right? Whereas you will have many coffee shops making better coffee than Starbucks, but people are sitting only for the experience. So that food and beverage industry in India will keep on going. And with food and beverages, I also mean that fast food industry may probably not see growth much because people are moving towards healthier options. Everyone is looking for healthy way of life. So if anyone gets an opportunity to do something in the healthy space of the food and beverage industry, probably they will end up doing much more better than others.
Okay. So F&B sector as well as finance.
Finance is an evergreen sector. You don't need me to tell you or me to tell anyone that finance will keep growing, because that is the sector which is driving everything in India.
Right. Perfect. So now there was a recent news that I read about RBI was talking about giving loan against silver. So usually we've heard of, giving gold loan, which is very, very, very common in India because majorly.
Especially in South, it is very, very common.
But now this providing loan against silver is a new thing, but it's also quite interesting in terms of how this will change the spectrum of people understanding silver, because we always look at gold as it's a bullion reserve, so there is a different perspective. Now giving a loan for silver, how do you think mindset will change and how will it reflect on the price of silver?
So I will tell you the actual reason why it was not allowed earlier and why it is being allowed now. So say for example, you are a company who gives loans against gold, right? So you take custody of gold from people, right? When you are taking custody of gold from people, it is easier to store gold because a small amount of gold has a very big amount of value.
Right.
Whereas in case of silver, if you look at 2 years back, 1 kg of silver was 40,000 rupees only. Now, with silver, even if you have 5 kg of silver, that amount 2 years back would have come to 2 lakh rupees. Now, against 2 lakh rupees, you will not obviously fund 100% of it. You will fund 50% of it. So, against a block of 5 kg, you are giving loan of 1 lakh rupees. Now, to store that 5 kg worth of silver, you will require a bigger space, bigger thing. In the similar space, imagine the amount of gold you would have been able to rent, right?
Correct.
Now, consumption pattern will also change with it. For the simple reason is that gold, since it has become very expensive, it has now actually become out of reach of normal people. So top 1% will not care for anything, they will still buy it. But remaining other people, all the other people, they either stop thinking about gold or they are thinking that what is the alternative of it. So all the jewelry brands also are now launching something on silver, right? So it is a shift in the cycle, whereas people are moving from gold to silver. And now when RBI says that okay, it is ready to give loan against silver, it also means that the same 5 kg of silver which earlier used to be of 2 lakh rupees is now 10 lakh rupees. Now put that into picture that if you are giving loan against that 10 lakh rupees, now you are able to fund 5 lakh rupees, and then against that 5 lakh rupees you will earn some interest, and based on that interest it is easier for you to pay the vault charges to keep the silver secured. Earlier that was not the case.
Right. So this shift in the prices is actually it's the other way around. It's than the price. I think the price has increased in silver, which is why now
the price has become feasible enough for them to keep to afford the vault charges to keep it secure.
Right. Now even this gold price increasing, right? Where do you think? And I think this might be one of the mostly asked questions.
You go to Soccerpet in Chennai, you can go to Majestic in Bangalore, or for Sonapatti in Kolkata, or Chandni Chowk in Delhi, or Javeri Bazaar in Mumbai, you will still find gold is being sold.
Yeah.
So there are few products whose demand is elastic to price.
Correct.
But there are few products whose demand works in the other way. Now gold, because it is now expensive, it has become playground of actual rich people. Earlier, which was for diamonds. Now with diamonds, you have lab-grown diamonds also. So the actual diamond craze, which people with wealth used to have now reduced. So what has happened is that people are now shifting from diamonds because of the lab-grown diamonds coming in. The value of natural diamonds have actually come down, and just because it has come down, the incentive to have those have come down. And earlier, when you used to see diamond jewelry being flaunted, now that is not the case. People have moved to gems. So gems is a separate business altogether, where you will have different kinds of pearls and gems. That is a separate thing. But the diamond, which craze it used to have, is no more there. Now gold has is probably taking that step, and the casual jewelry market, which earlier was a gold market, now is shifting to silver, and that is the shift we are seeing in the consumption pattern.
Right.
And that's why almost all the top jewelry brands in the country now have a silver segment also, which was not earlier the case. You have to go to a small shop and give order to get silver jewelry made, but that has changed.
So they're consciously pushing silver as well along with gold.
Because they know that affordability is not there, right?
Right.
The pace at which gold has gone up, probably people's income have not
catching up with them.
And how will you catch up? You had gold appreciation of more than 100% in a year. Your salary probably won't have gone up by that much, right? Our income has not gone up by that much. Right. So it is very difficult to catch up.
Correct. So now this gold appreciation is going more than 100%.
Yes.
Will it go further up or will it come down? Will there be a correction?
Coming down is not a case for.
Then what is
in our history of whatever time I have seen, whatever study you have done, have you ever seen Indian gold prices coming down?
No way.
It comes down by 500, it goes up by 2000.
Correct.
Right. And why this happens is because gold is technically pegged against US dollars, and we either that gold prices are going up or our currency is depreciating. So either of the two things are happening simultaneously. When two things are happening simultaneously on the price upward direction, how will you expect the price to come? That's why prices are not. And that will remain the case.
That will remain the case, and there will always be a craze for gold.
I'm not very sure. Demand for gold will be there, but the craze of gold probably will lose sheen as long as it is around 1,20,000, 1,30,000, because now people cannot afford.
Cannot afford it. Affordability has become the problem. But people are moving towards other alternative forms of investments in gold, right?
Just a while back, you would have heard earlier we used to have gold of 22 carat, 18 carat, 14 carat. Now government has given permission of 9 carat also.
Correct.
Right. Because they also know that now it is difficult to have a jewelry worth 22 carat. Now 22 carat gold jewelry, if somebody is buying, assume that person is actually rich or very rich. The purity of gold, it even at 22% is 91% only, 91.6%. This is the actual purity of gold, even at 22 carat. If you go down till 9, the purity of gold left in that particular component is only 20-25%. So if you are having only 20-25% of your gold at that level, instead of buying that, why you should not go for silver?
Right.
This is what it will come up very soon. And once people start understanding, they will move towards it.
Right. And coming back to that question, so this loan against silver, do you think it will be a hit if it gets executed? Will a lot of people start giving their silver to get the loan? Because there is also a lot of credit crunch in the economy, right?
But people are not holding that amount of silver. Then again, that is a challenge. Once people start holding it, then it becomes a great cycle thing. But for now, it is just in a trial run. No, they have actually implemented it, but as a product point of view, it is just a trial.
Right.
Because I don't see a great holder of silvers as of now.
Maybe in future. Now, maybe in future it's possible. Right. Great. Now, before we conclude our session, I just want to know or tips that we would give when salaried, an average Indian, right? An average Indian is someone who's earning 50,000 to 60,000 per month, living in a metro city. What should be his or her investment choices? Of course, their background can be different, their aspirations can be different, but These are the things that you must do. 1, 2, 3 things.
So, to put it simply, if you're earning 50,000 rupees, that is your net in hand in your bank. Assume that you are only earning 45,000.
Mm.
It should not be the case that I will spend money and whatever is left, I will save. Keep money aside for saving and then spend whatever you want. So, bare minimum, at least 10% you have to keep it aside for saving. The higher percentage, if you can afford, you can always do it. Say, for example, if you don't have any commitment, you don't have any family to look after and all those things, you can obviously save a much more higher amount. But uh, at least bare minimum, you should keep aside 10% for savings. Now, savings, that 10% can be allocated in three different sections. Gold, you cannot buy gold directly with that small amount, but you can have gold ETFs, right? So have it in three different places. Say, for example, that amount is 5,000. So have 2,000 rupees worth invested in equity mutual fund, 1,500 in this thing gold fund or a gold or silver fund combined, and 1,500 rupees in a liquid fund or in form of debt. So what happens is that this debt component, whenever you need fund, you can always sell it easily. Others also, other mutual funds and other things also, you can always sell it off. But the debt component, you can easily book profit and you can easily take money out of it. The value reduction is not the case applicable over there. Mutual fund, it requires a long-term saving point of view, like I will save it for 20 years, 30 years, then only you will have a good amount of profit. So whether it is gold or equity mutual fund, you need to be invested for a longer duration. And debt fund is the safety net, additional safety net you can.
So another question around the recent SEBI order that's still under revision, but we've not gotten any confirmation about removing the weekly expiries in trading, right? So how will this impact, let's say, the retail traders as well as the brokerage firms? What will be the impact if the weekly expiries are removed?
So if I read it correctly, whatever they wanted to remove, they have already removed it. It has already dented the turnover or the number of trades by 70%. Remaining 30% is left. If you over-regulate it, it will destroy the market which is remaining. So if you, say, for example, come up with this idea that will not have weekly expiry, then the option trading market in India is over forever. Forget that option trading existed also, because nobody will now be interested, because the premium movement will only happen in the last week of so options market in India existed from 2002. Nobody knew about it till 2016 when Bank Nifty weekly expiry was introduced. It was only few people's play till 2016. It was weekly expiry only, which made people interested every week. Right now, today, okay, you have only Sensex and Nifty expiry happening weekly. But if you end that also, nobody will come at the last week of the month for trading. And if you see the downfall of the Indian trading spectrum, when this downfall was happening, Indian traders started trading on international exchanges, trading international products. So the intent was to drive away people from trading, but it actually drove them away out of India. They started trading on international products, international exchanges, and that resulted into a parabolic effect where people used to trade options or futures with a lesser leverage in Indian market now are trading at 10-fold times of more risk, more leverage in international exchanges, which is more risk. Yes, it is more rewarding also in few cases, but it is more risky also.
So you're saying people will pull out money here if this happens, and put it elsewhere.
Traders will trade. So whatever instrument they get, they will trade. They will not trade in Indian market. They will trade abroad,
or they go for Bitcoin. I think that's
yeah. That was a natural extension that happened. Crypto trading picked up exactly when Indian market started down.
Correct.
And if you stop the options completely over here, they will go for crypto trading. They will go for international exchange trading.
So this will definitely have a lot of repercussion and
Yes. And that's
liquidity
why
crunch.
this is still something which is in discussion. Only if SEBI wants to kill the entire option trading market, they will go ahead with closing the weekly expiry, or else this is here to stay. It may happen that you will have Bank Nifty coming back as an expiry.
Right.
So it may happen in the other way also.
Mm-hmm.
Don't think that it is going to close down. It may happen that they will revise their thought process and they will bring back the Bank Nifty weekly expiry,
Right.
so that it adds to something. So then you will have 4 to 5 days of expiries in a week.
Right. Let's hope that that's what happens. Perfect. Thank you, sir. Thank you for joining us and sharing all your thoughts.
Thanks for having me in the
Everything.
conversation.
Perfect. Thank you so much.